All right, let's talk about trading. If you're looking for a clear, structured roadmap to get you from A to B, you've come to the right place. We've gone through Topstep's entire Trading Foundations series and boiled it all down to 4 essential pillars. Think of this as your guide, from just getting started to building a strategy you can actually rely on.
Okay, so here's how we're going to tackle this. We're going to build your knowledge from the ground up. We'll start with Trading 101, which is all about the rules of the game itself. Then we'll move to 201, where we focus on the most important player in the game, that's you. After that, in 301, we'll analyze the playing field, the market. And finally, in 401, we'll put it all together to build your personal playbook. First things first, you can't expect to win a game if you don't even know the rules, right? So before we do anything else, we have to understand the basic tools and the fundamental principles you'll be working with. This is the bedrock for everything else we're going to talk about. At the very heart of what we're doing is the futures contract. Now, don't get bogged down in the definition. The key concept here, the thing you absolutely have to grasp, is that it's a zero-sum game. What does that mean? It means trading doesn't create new value or new wealth. It simply transfers it. For every single dollar a trader makes, another trader on the other side of that deal is losing a dollar. Once you truly understand that, you start to respect the risk involved in a whole new way. Now, let's talk about leverage. This is the engine that makes futures trading so incredibly powerful, but you've got to know, it is a massive double-edged sword. To put it simply, leverage lets you control a large position with a small amount of your own money. So, let's say you put up $1,000. With leverage, you might be controlling a position worth, say, $20,000. Now, if that position goes up just 5%, boom, you've doubled your money. Sounds great, right? But here's the other side of that coin. If it goes down 5%, your entire $1,000 is gone, wiped out. That's the power and that's the danger you have to manage every single day. So with that in mind, here are some cardinal rules you need to burn into your brain. Rule number 1 is the big one. Prices do not have to do anything. The market does not know you exist, and it certainly doesn't care what you think it should do. It's going to do what's going to do. So what can you do? Well, you can identify which of the 2 basic states it's in. Is it trending up or down, or is it just balancing in a range? From there, you have to learn to be okay with not knowing what happens next. You have to learn to function in a world of pure uncertainty. And the way you do that is with the final rule. Stop chasing a dollar amount. Focus all your energy on your process, your plan, and just executing that plan perfectly. The money is a byproduct of good process, not the other way around. Okay, let's move on to our second pillar. Now that we have a feel for the game board, we need to turn the focus inward. Because in trading, you can have the best system in the world, but the most unpredictable, the most challenging, and honestly, the most dangerous variable in the equation is always going to be you. So let's be real. Your biggest opponent in the market is staring right back at you in the mirror every morning. And that opponent loves to use what we call the trilogy of terror. First up is ego. That's the little voice in your head that says, I can't be wrong on this trade, causing you to hold on to a loser way too long. Then there's fear. Fear is what makes you jump into a trade way too late because you're afraid of missing out. That's FOMO. It's also what paralyzes you and keeps you from taking a perfectly good setup. And finally, there's greed. Greed is that feeling that convinces you to hold a winning trade for just a little more, only to watch it reverse and turn into a loser. Sound familiar? These 3 are responsible for almost every mistake a trader makes. You know, all of trading psychology really just boils down to this piece of ancient wisdom. It's perfect. Inside all of us, there's a battle going on. One wolf is discipline, patience, and humility. The other wolf is ego, fear, and greed. And the one that wins the battle for your trading account is simply the one you choose to feed every single day. Okay, so we've defined the game, and we've taken a hard look at ourselves as the player. Now it's time to look outward, at the playing field itself. How can we look at a chart and objectively figure out what the market is actually doing? At its very core, the market is just a simple, continuous, 2-sided auction. That's it. Think of price as just an advertising mechanism. It moves up, 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 advertising for sellers. When it gets high enough that sellers think, hey, that's a good price to sell, they step in and buyers back off. Then a new auction begins to the downside. Price moves down, 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 advertising for buyers. And this cycle just repeats over and over on every time frame. Your job isn't to be a fortune teller, it's just to read the story the auction is telling you right now. So how do you know if that auction has any real strength behind it? Well, you look under the hood at the data. This table is a fantastic cheat sheet. You look at price, but you also look at volume, how much trading is happening, and open interest. Just think of open interest as the amount of fuel in the market's tank. When price is rising,
and volume is rising, and open interest is rising, well, that tells you new money is confidently coming in to push that trend higher. That's a healthy, strong trend. But if you see price still creeping up, but volume and open interest are starting to fall off, that's a massive warning sign. That means the move is getting tired, it's running out of fuel, and it might be getting ready to turn over. And that brings us to our fourth and final pillar. This is where the rubber meets the road. This is where we take everything we've learned, our knowledge of the game, our self-awareness, our market analysis, and we forge it all into a repeatable, disciplined plan of action. This is your playbook. This really is the million-dollar question, isn't it? It's one thing to understand all these concepts while you're watching this, but how do you actually put them into practice when the market is flying around, the pressure is on, and your emotions are running high? How do you stop making those impulsive, destructive decisions? The answer is you have to create a formal plan. You have to stop acting like a gambler at a casino and start acting like a business owner. And this is work you do before you even think about putting on a trade. First, you define the context, zoom out and look at the bigger picture. Then you form a clear hypothesis. Based on what I see, I believe the market is trying to do X. From there, you plan every single detail of your potential trade, your exact entry price, your profit target, and most importantly, the price that tells you your hypothesis was wrong. That's your stop loss, your point of invalidation. And then, win or lose, you review every trade so you can refine your process for next time. At the end of the day, it really all comes down to this simple but powerful formula. True trading mastery isn't just about reading charts, and it's not just about having a strong mindset. It's found at the intersection of all three. It's your deep understanding of the market, combined with a deep understanding of yourself, all multiplied by the consistent, disciplined application of a solid strategy. So, as you go forward on your trading journey, keep these four pillars in mind: the game, the player, the field, and the playbook. Building them up is a choice you make, a practice you commit to every single day. And ultimately, your success is all going to come back to that one single, powerful question we asked earlier.